Imagine a company so powerful it fooled Wall Street, investors, and even the US government, until it all came crashing down. This is the story of Enron, a $60 billion empire built on lies, fraud, and corporate greed. Welcome to the Financial Blueprint, where we uncover the biggest financial scandals, market secrets, and money lessons that shape our world. Want to avoid falling for the next financial disaster? Hit subscribe and let's break down the biggest money stories, one blueprint at a time. For years, Enron was hailed as America's most innovative company, a $60 billion empire that symbolized the future of energy and finance. But behind the scenes, it was all a lie. By the end of 2001, Enron collapsed in the largest corporate fraud in US history, wiping out thousands of jobs and billions in savings. This is the story of how greed, deception, and arrogance led to one of the biggest financial disasters ever. Enron was born in 1985, a product of the deregulated energy market. Under CEO Ken Lay, it transformed into a powerhouse, making billions trading gas and electricity. But it was under Jeffrey Skilling, Enron's ambitious new president, that things took a dark turn. To keep up Wall Street's expectations, Skilling introduced a radical accounting method called mark-to-market. Instead of reporting actual profits, Enron counted future expected profits as current earnings, even if those profits never materialized. To hide Enron's growing debt, CFO Andrew Fastow created shell companies, fake firms designed to hold Enron's liabilities while keeping the stock price high. It was all smoke and mirrors. By mid-2001, cracks started to show. Analysts began questioning Enron's books. In one infamous call, Skilling lashed out when asked why Enron refused to release its balance sheet. Then, the moment of truth. On November 8, 2001, Enron admitted it had overstated earnings by nearly $600 million. Within weeks, its stock plummeted from $90 to under $1. Employees lost everything, and the US government launched an investigation. In the wake of Enron's catastrophic collapse, the US Senate summoned its top executives to testify under oath about their role in the company's downfall. Former CFO Andrew Fastow, the mastermind behind Enron's financial deception, invoked his Fifth Amendment right, refusing to answer any questions. Chairman and CEO Kenneth Lay followed suit, staying silent in the face of allegations. However, former CEO Jeffrey Skilling and Vice President Sharon Watkins agreed to testify, shedding light on the inner workings of a scandal that shook the financial world.
She encouraged me to meet with Mr. Lay personally. I fully expected Mr. Lay to conduct a thorough investigation into my concerns. I was disappointed that such was not the case. I was incredibly frustrated with Mr. Lay's actions or lack thereof. I believe that Enron had a brief window to salvage itself this past fall, and we missed that opportunity because of Mr. Lay's failure to recognize or accept that the company had manipulated its financial statements. Throughout the global finance group, as well as upper management, I believe it was well understood that the Raptor entities were primarily backstopped with Enron stock. It wasn't a hidden fact. I do think certain people thought it was some magic structure that was acceptable, but others that had some concerns about it kept their concerns mainly to themselves.
Let me begin with a recap of what I understand about what Enron has said in recent SEC filings. First, there has been a restatement of 3 items, none of which affected cash flow or future period earnings. Second, there may have been self-dealing by a small number of executives, among whom I have not and cannot be counted. But in addition to those statements, there is also a raft of currently unproven assertions of additional accounting issues, the primary ones relating to something called the Raptor hedges. What do we know about these hedges? We know that the company's accountants, Arthur Andersen, agreed with the treatment of these transactions all the way up to their technical group in Chicago. We also know that the Powers team hired another accountant that apparently disagrees with Andersen, and I take it also that Ms. Watkins also disagrees with Andersen. If the focus of this hearing is a game of dueling accountants, I will state right now that I'm not an accountant and probably have little to add to that debate between experts. I know that you will be asking questions about who did what at Enron, but I hope in addition to those technical issues, you will also ask about how a company as strong as Enron can be bankrupted by what I call a run on the bank. I have some thoughts that I think a number of you have asked for that might be helpful and are important to the financial system. But before we start, there are a few things I think this record should reflect. I will not respond to all the outrageous things said about me in this process because some have been so silly that they merit no response. 3 others, however, do merit a response. First, I have not lied to the Congress or anyone else about my recollection of events while I was at Enron. Second, I never duped Ken Lay. I heard Ms. Watkins testify to her opinion. I have no idea what the basis is for that opinion. Third, I do not believe that my testimony is contradicted by or is materially different than the testimony of either Mr. McMahon or Mr. Mintz, for both of whom I have a tremendous amount of respect. And now, finally, a few observations about this congressional process to which I and others have been subjected. What has happened thus far, primarily in the House, should be cause for concern of every American. The entire management and board of Enron has been labeled everything from hucksters to criminals with a complete disregard for the facts and evidence assembled. These untruths shatter lives, and they do nothing to advance the public understanding of what happened at Enron. The framers of the Bill of Rights are watching. My dilemma, like that of other innocents called before these committees, is whether to take refuge in constitutional protections to avoid your questions or stand on the constitutional presumption of innocence to proclaim the truth. I am here and prepared to answer the committee's questions because I have nothing to hide. I take and will continue to take full responsibility for my actions as a senior executive of Enron Corporation. While I worked at Enron, I served the shareholders and the board of directors faithfully. When I left Enron on August 14th, I did not believe the company was in financial peril, and I have no knowledge of any wrongdoing.
The fallout was massive. Fasto, Skilling, and Lay were charged with fraud. Enron's bankruptcy led to sweeping reforms, including the Sarbanes-Oxley Act, designed to prevent corporate fraud. But for thousands of employees, it was too late. Is corporate fraud still a risk today? Could another Enron happen? Let us know in the comments. The Enron scandal was more than just corporate fraud. It was a wake-up call for the entire financial world. So, what can we learn? Always question the numbers, follow the money, and never trust a too-good-to-be-true investment. If you found this breakdown insightful, hit that like button and let us know in the comments. What do you think was Enron's biggest mistake? Let's talk. And don't stop here. Check out our deep dive into the 2008 financial crisis, how Wall Street's greed crashed the economy. Click on the screen now to keep learning. And of course, subscribe so you never miss another eye-opening financial story from the Financial Blueprint.